we've had some terrific data points, whether it's been productivity, first quarter GDP, jobs reports, and today the fourth highest JOLTS number ever, just shy of 7.5 million. Yet rates are definitely on the soft side. I understand tariff issues. Michael, explain what you see in rates.
So I think that you had a situation where rates came down sharply because of concerns about the global economy, about recession. You're right, the data's been a bit better, certainly in the U.S., perhaps a little less so abroad. I think that you do have these lingering concerns about downside risks, and trade's part of that story. So I think the market is still, at least the rates market, is still kind of concerned about what the medium-term outlook is.
All right, now let's frame this out old school. Supply, demand. On the demand side, obviously, the U.S. is the high water mark. Many investors would like to buy that nice positive rate, even adjusted with currency issues and low inflation. On the other side, we have the supply side with huge deficits and auctions of the biggest magnitude we've seen in the history of Treasury. Which of the issues do you think is most important? Is it the demand more than it is global weakness?
So I think it's demand for sure. I think it's a combination of things on that side. I mean, you're just not seeing the market really get worried about large deficits right now. And that's not just a U.S. story. That's a global story. So I do think it's a combination of demand factors. And I do think that that is probably going to keep us capped in terms of just how high yields can go for the foreseeable future.
Now, everybody's an armchair diplomat these days, of course, with what's going on with China. Now, today aside, we don't know how it's going to end, but it certainly seems to me that all trading points outside the U.S. are quaking in their boots much more than the U.S. if any of this gets a bit more dicey on trade. You want to weigh in, Michael?
So I certainly think there's some concerns on that front, right? So there's obviously concerns about what the implications would be if we actually had higher tariffs on China and what the spillover would be to the broader global economy. A lot of concern about European weakness is through a China channel. I do think that if you were to get some sign that other forms of tariff were going to get discussed, then you would probably again get some risk-off move in the markets.
Now, in the last few seconds we have, are there any important milestones ahead regarding the issues with China that we should pay particularly close risk-off attention to, Michael?
Well, I would say on the trade front, you have a decision that needs to be made on those auto tariffs, the Section 232 on May 18. That's probably less China than other trading partners, but nonetheless, that's an important date to keep in mind.